All right, guys, welcome to another live stream. Welcome to another live stream. Happy Friday. Happy Friday. In today's live stream, we're going to talk about Nvidia and we're going to talk about whether you should transition into a new electric vehicle or should you transition to electric vehicle from your gas vehicle. And I'll get into the reason why I'm posing that question. But yeah, so Nvidia ended the day at 113. You got to remember when it did the stock split, it was at 125 to 130, right? So, and we spoke about Nvidia's chart, and it's overextended. Now, let me share my screen really quick, and we can go and take it off once I finish. But let me share my screen really quick. Give me just a sec. Give me just a sec. All right, cool. Right. So here's the Nvidia chart. Right. Look at this this parabolic move. Right. I said before it started off at 250 before the stock split. Right now, this lower area is around 16 to 20 bucks. So maybe it was around 160, that $200 area before the stock split. But 2022. Right, so we're in 2024. We're almost done with the year. 2 years, Nvidia basically did close to a 10x. Right, and we're starting to see this crack at the top, and it looks like Nvidia's gonna do a correction. Now, like I said before in my previous live streams, there's a lot of positive catalysts coming up. We have interest rate cuts, right? We have the whole AI boom. That whole AI narrative is not slowing down. You see it in crypto, you see it in stocks. People are very bullish on AI, but we have to be honest, Nvidia hasn't cooled down since the last 2 years. Now, if you look at the chart, it did have a little bit of pullback. So here at 48, it came back all the way down to 42, and it looks like it had a little correction here, but not too much. It was very, very slight. All right, so 2 years, Nvidia really hasn't had a sizable correction, and rightfully so. If it was a company that didn't produce any good product, if it didn't have good services, and I don't really think it's in the service market. I think for the most part, it's hardware. But I actually do think they're rolling out software too, or they do roll out software. So yeah, it's not like they're a company that's not producing, and they're in one of the hottest sectors possible right now, AI. Obviously, they're not AI like driven, but their GPUs are mainly used for AI services. So yeah, you can basically say Nvidia's very much an AI company. When you think of AI and you think of companies that benefit from the AI boom, Nvidia's number one in my opinion. But yeah, looking at this chart, it looks like it needs a correction. Now, so Richard Fain was pointing this out the other day, and it was actually a good comparison. He was saying if we look at let's transition. If we look at Microsoft, we're gonna look at other companies that are in the $1 trillion valuation. So Microsoft is one of them. It's 3 trillion. It's 425 bucks, right? And then Apple. Apple's the third. I think there's another one too, but I don't know which one. $200. So he made a good point. Richard Fain made a good point. Those two, and I think there's another one too, but I can't remember. And I think that one's in the $1 trillion valuation area as well. All those stocks that are worth $1 trillion or more, they're not in the $100 area. So it just shows it. It's more of a psychological thing where it's like if a company's worth a few $1 trillion and it's at 100 $120, or it's trading at 120 bucks, or it's 113. Where is it at? Let me get to Nvidia again. Hold on. I think it's yeah, it was 113. Right. So if you have a $1 trillion company that's that's trading for 113 bucks, and every other company that's in the $1 trillion valuation space, most likely this is going to be trading over 200 bucks. Now, is it going to do that in the next coming months? Is it going to be there at the end of the year? Who knows? But what I do know is the chart looks very overextended. Now, technical analysis is really, I wouldn't say it's nothing to go off of, but it doesn't override the fundamentals. If we look at the fundamentals of Nvidia, they're doing good with their sales. They have demand. They're in the hottest sector. They've been around for a long time. So this can very much have this little pullback and then go straight to like 150 or 200. But again, it all depends, like I was saying before in my previous live stream, it all depends on this earnings coming up. I believe at the end of August, Nvidia is going to report earnings for, it would be, let's see, I'm trying to figure out what quarter. So January, February, March, April, May, June. Okay, so it'd be reporting for the second quarter. Earnings for the second quarter. So yeah, it just depends on what their earnings report reveals. If they hit last month's numbers, it could bring the stock down. Now, not because doing the same thing you did last month, because last quarter was a good quarter for them. So if they meet if they have the same revenue as last quarter, that's still good overall, but you got to think about it when it comes to people buying into a stock and how headlines would look. Like headlines, like people would, like a lot of news outlets will put it in such a way that it makes it seem like a negative thing. Oh, Nvidia does the same thing as last quarter when it was great, right? They did, I forget how much they did last quarter, but they sold a lot of GPUs. They made a lot in revenue. I think they did 200 to 300% over what they were expecting, or something like that. So, I mean, if they match that this quarter, for me, that'll be very bullish. But you got to understand how the media will paint that, and retail will drive the price down. And again, too, psychologically, if somebody's looking at the chart, like you have a lot of people shorting Nvidia. And just stocks in general. You have people that are pessimistic. They want to make money on the way down. They want to make money on the way up. So they're looking at this chart, and I'm pretty sure a lot of those people that have that capital to play with the market, and you can't really play with, I mean, you could if you have a lot of money. I would say institutional people can do it. And those are the people that kind of control the media outlets to, okay, one, we're going to say that Nvidia had the same revenue as last time, and then we have all this institutional money where we're going to short the stock. So now you have a negative news, and then you have that selling pressure, and then people are looking at, and then on three, you have a chart that looks like it needs a correction. So it doesn't necessarily have anything to do with the company itself. I think Nvidia is going to be a $10 trillion company in the next 3 to 5 years. So that's going to be a 3x from here. It's going to be at $300-400. So, and maybe a lot higher. But I think maybe in the near term, and I don't know, right? It could go both ways. Like I said, it all depends on the earnings. It all depends on the rate cuts. If they cut rates well, they're going to cut rates in September. So again, that's helping them out too. So here's the thing. And here's my prediction for Nvidia. My prediction for Nvidia is that after earnings, I don't think earnings is going to come out too hot. So I think it's going to dip a little bit. You're going to be able to, and this is not investment advice. This is just and I'm not even invested in Nvidia. Just my take. but I think it's going to come down from 113. It's going to probably go into maybe the low 90s, high 90s from the earnings report, because I'm predicting that the earnings report is going to say, yeah, we did the same thing as last quarter, or we didn't do that much. Maybe we did 10 to 20% over last quarter, which last quarter they did 2 to 300% more than what they expected, I believe. Something like that. It's a 2 to 300% something over what they expected. So I think that's what's going to come out. I think that news is going to come out. Nvidia is going to take a little dip in the low 90s, and once they cut rates in September, then we'll get that spike up again in Nvidia going into the end of the year, and I think we can probably finish close to $200 for Nvidia by the end of the year. Because, like I said, with these rate cuts, remember too, it's a political year as well, so the market needs to look good, especially towards the end of the year. You know, November is going to be the election. December, it just needs to look good. So I think we're going to get a slight pullback. Maybe. I mean, it's already did a slight pullback. I don't know. This thing could continue to run up too. I'm just painting the case for the bearish scenario, but we could very much go higher. We could very much go to $200 because of the earnings report and the rate cuts in September. Now, I'm trying to see if, let's see. Yeah, it's at 2.78. AI chip rally returns Friday with Nvidia and other semiconductors. So let's look at it. Some other stuff, some other kind of AI plays. ASML. This is like the chip manufacturer, machinery and stuff like that. Let's see. So this is up. ASML is up. I think SMIC. What's the other one? I don't know if it's SMIC. It starts with an S. I don't know why I can't remember that. Gotta remember. It was another semiconductor company. Let's look at Intel. So ASML's up. Nvidia's up. Yeah, I mean, like I said, it could very well be that Nvidia's gonna go up on its next leg up. Typically, though, after stock splits, stocks go down for a little bit. I mean, like I did, it did do a little correction. Again, I'm just giving the bearish case for Nvidia. I think long term bullish. I think end of the year we're gonna be bullish. I'm just saying the earnings report's a little bit on the fence for me because they did so well second quarter. I don't know if they're going to match that, if they're going to come close to that. I'm not sure. You know, it's hard to top 2 to 300% over than what you were expecting for the following quarter. I mean, maybe they do the same, but again, they could paint that negatively. But overall, like I said, I think Nvidia long-term easy double in the next 3 to 5 years. So much liquidity. It's a multi-trillion-dollar company. And yeah, you know, very, very positive outlook for Nvidia. All right, so let me stop sharing the screen. All right, so the next topic is, should you get an electric vehicle for yourself? Should you trade in your vehicle currently for an electric vehicle? Now, let me tell you my situation. Let me tell you why I'm bringing this up. And it's because my lease is ending in October. Now, if I give you a history on my cars, so I would say like in college, my college days, I had like, my cars were no more than 5,000. All right, so, and the reason why I did that is because it was easy just to pay those off cash. Maybe I put $2-3 grand down, take a little personal loan out. And this is back then. All right. I was in college. I didn't have much money. So, you know, paying a $5,000 car was a big thing. So I wouldn't get cars over 5K just because I didn't have the money to do so. But then once I started learning more about finance, once I started making some more money, because that was the key thing. Even if I learned more about finance and there was no increase in salary, I would not be getting a newer car or a car that's over 5K. So yeah, so in college I had beater upper cars lower than 5K, and it was a lot of maintenance, right? Because and at that price range, you're buying cars that are old and that they need a lot of maintenance. I mean, even my current lease, I bought it. You get the leases brand new. After 2 to 3 years, you need to start changing brakes. You need to start changing filters and things like that. So yeah, that once I started learning more about finance, I was like, I'm just gonna start leasing my cars because one, I don't like to deal with the headache of fixing the car when it needs maintenance. Cars need maintenance after 3 to 5 years. Every year you're going to, or every 6 months, you're going to need an oil change. Depending on what type of oil you get, if you get this full synthetic, it can last you a lot longer, which a lot of the leases I get now, that's typically what it is. But yeah, but I still had gas cars. So when I transitioned out of college, I got my first good paying job. I still had the beater uppers, my first job out of college. It's when I doubled my salary, I started working at Citibank. That's when I was like, okay, it's time to upgrade this car. And I was like, but I don't really want to buy a new car. I think buying a new car for me is such a waste of money. So let's break it down. So one, you have to put more of a down payment when you buy a car. Usually with leases, you get better deals. They don't request that you put so much money down to purchase to get the lease, to get the car off the lot. So for leases, you can get away with putting $2,000 to $3,000 down, especially if you already had a lease prior to that, which I didn't. But I think my first lease, when I got my first lease, it was a Lexus IS 300, and I think so the reason why I got a really good deal on my first lease was because it was COVID. It was I don't know if it was either towards the tail end of COVID or maybe even the middle of it, right? It wasn't, yeah, I think it was towards the middle of COVID. Like we still had like a year and a half before everything got back to normal. But at the time, they were giving such good deals, especially on apartments too. I'm going to keep it to cars, but at the time they were giving good deals on apartments because nobody wanted to move out. So they were giving out 1-2 months free for apartments. So yeah, during that time, I was like, I'm just going to get a new car. But then I learned, I was like, everybody was saying, like, people that knew about finance on YouTube were saying, just lease the car, lease cars, lease cars. Everybody's saying lease cars. So I was like, let me look into this. Maybe it's something I want to do. And I didn't mind at first, like when I first like bought cars, my thing was I don't want to have a payment. I don't want to have a payment. I don't want to have a payment. But then when I was paying my little $5,000 cars off, I was seeing that I needed so much maintenance, or the car would stop on the middle of the road, and it was just a hassle, right? Like, yeah, and I'm pretty sure a lot of you that had beater upper cars, hoopties, you know what it is, where you don't take your car to the dealership to get maintenance. You take your car to the ghetto, like the mechanics in the ghetto, so you could get a huge discount on some engine work, or you could get a huge discount on oil changes or brake work. And that was good as far as saving money, but a lot of those mechanics would jack up your car. You get your car 2-3 weeks later, they'll forget about your car. They'll dirty your, when you get your car back, it's all dirty. So there was a lot of problems that came with used cars. So I was like, when I did my research, I was like, I think this lease thing is going to be the best option. Yes, I remember I liked to have, when I bought the cheaper cars, I like to pay them off, now have a payment. So I was like, yeah, I'm gonna have a payment, but now I don't have to deal with the issue or the problem of maintenance. I don't have to deal with the problem of maintenance because the car is going to be brand new. When you lease a car, you get it brand new. So you don't have to worry about the engine blowing up in the middle of the highway or getting maybe your alternator goes out or whatever the case may be. The little stuff that happens with the car. But yeah, I was like, I like that idea. It was just one less thing I had to think about. So I was like, okay. And then also, I was doing leases at the time because my first job out of college was PwC, but I didn't get my first lease until I moved to City. But before I moved to City, which I don't currently work there, but when I moved to City, prior to me moving to City, I worked at PwC and I was doing leases. And so I learned how to write leases, or at least how they were structured and things like that. And then I was reading on like how you can get the best deal when you go to the dealership to lease. I recommend everybody do that. Like if you're going to go lease a car, or even if you're going to go buy a car, I recommend that you go. Sorry, this thing is like hurting my leg. I recommend you go and just research how to do the negotiations, see how you can lower your down payment, and know that you should always be at least have three. If you're going to buy a car, at least see that car or find that car in 3 different dealerships and try to make them bid against each other. Don't go to the first dealer and say, "Oh, I want that car." They're definitely going to know that you're not as advanced at negotiating cars, and they're gonna try to screw you over essentially. Because, and the thing too, I don't go into the dealership ever to negotiate a car. I usually just go to the dealership to pick up the car. I usually do all the negotiations over email or the phone, because if you notice, every time you do negotiations for a car, they always want you to come in and test out the car. Oh, do you want to come and drive? You don't need when you're leasing a brand new car, you don't need to go test out the car. As long as you know the brand, the car's going to work fine. It's brand new. You could test it out once all the paperwork's done, right? Like there's plenty of cars. Like if that brand new car is not working the way it should be, you can get another one, but it's going to drive good. So you don't need to go into the dealership to work out your car deal, right? So that's what I've learned too. That was one of the first things that I learned was make sure you go in person to finish this deal. Make sure you finish it over email, you finish it over the phone, so that way there's no foolishness, right? You're getting all the fine print figured out, and you're just going to the dealership to pick it up, sign some paperwork, making sure the paperwork is what you agreed upon, and that's pretty much it. Because you, like I said, if you go to that dealership and try to work something out, you're going to be there all day. So many people are going to try to finesse you. They're going to try to get the payment to be an extra $50 to $100, and it's just not going to be a good time. But yeah, so my first call, so I was doing leases at PwC, and I learned how to the structures of leases. I learned that you can go and negotiate the lease. So I was like, leasing a car is where I want to be, because I don't mind if it's a decent payment, because you got to think about it. Even if you pay a cheap car off $5,000, that's $5,000 cash that you have to give up, and then all the maintenance. So for me, in my mind, I was like, I always just need to have a brand new car, and I don't mind paying those payments each month, because let's just say I bought the car instead, it's still going to be a $20,000 car if it's brand new, and I'm not going to pay a $20,000 car off cash. I'm just going to pay it monthly. So that's going to be 4 or 5 years worth of payments. You're going to use the car for 4 or 5 years, and what happens after 3 to 4 or 5 years of you using the car? It's going to need maintenance. So for me, I was like, you know what? I'm just going to do leases. I'm just going to lease the car and get a new car every 2 to 3 years. And it's almost like houses and apartments. we were in an era where everybody likes to be in something new every 2 to 3 years. Is it financially responsible? Can you have the same car for 30, 40 years? Yes, but can you have a different car every 2 to 3 years and be financially responsible when you do it and not just going overboard? Yeah, you could do that as well. So that's the option I opt to do. So I learned how to do leases. I learned that you can negotiate. So when I went to City, that's when I got my first lease, the Lexus. And like I said, I wrote up my own lease and I did all the negotiations over email. I reached out to three or four, maybe even more dealerships before I came down to the one I was gonna make. And I was bid, and they didn't bid against each other. I said, hey, there's the same car over here in Orlando, and they're giving me this. And I also had a lot more leverage because I said it was during COVID, and it was a time where nobody was leasing because nobody was outside. In COVID, everybody was stuck inside. Everybody was still traumatized from the virus, and they didn't want to go outside. So everybody was getting deals. Even to the point where when I was moving and I moved into my first apartment, all the furniture was so cheap. I was able to get my like king size bed mattress for like half off, and I ended up getting more of a discount because the mattress that I was gonna initially get, they couldn't deliver it on time. So she's like, no, I'm just gonna upgrade you to this mattress. So they were just giving out a bunch of deals. So I had that against my side too, and I think you can plan that. I think you can't plan like a pandemic like that. But what I'm saying is, for instance, like interest rate cuts. And again, I'm all over the place, but I don't care. I'll talk about whatever. Interest rate cut, like let's say interest rate cuts are getting lower. Most companies are going to work with you and give you a good deal for things like cars or things like houses because now interest rates are low and they need more. They have to work with people a lot more because they're not going to be making so much money on interest. So yeah, I had the advantage of having the fact that nobody was going outside, so things were cheaper and things like that. So I went to the dealership. I got my first Lexus. It was gas, right? So just to get back on the topic, should you transition to electric? So I got my first car, and it was nice. It was brand new. It was my first brand new vehicle. My payments were $410, and I only put $3,000 down. For an IS300, that was a killer deal because IS300 is not. I think it's still popular, but at the time it was really like one of those cars that everybody wanted. Still, everybody I think a good amount of people want it now, but it was very popular at the time. So IS300, and yeah, $410 a month, $3,000 down. I only put $2,500 because I traded in my Scion, which they gave me $500 for. Stole that from me, but it was a beat up car anyway, so I didn't really care. But yeah, so I had that. So mind you, I only put it was a $35,000 car. Retail price, I only put $3,000 down, and I had it for 3 years for $410 a month. So really, I only paid. So it was like it's like $4,800 a year, close to $5,000, $15,000, plus the down payment, so $17,000, and then I trade the car in. But again, I think it works for people that can just pay the payment. And I think it equals out because people are gonna say, oh, but then you don't get to keep the car. But again, you got to think after 3 to 5 years, the car is gonna need a lot of maintenance. Like even the Lexus I have now, it's doing like the squeaky thing with the brakes. So it's probably gonna need brakes soon, but I'm not gonna change it because, like I said, I'm transitioning to a new car soon. So yeah, so that car, 3 years went up. Now, here's another thing that happened. I feel like every year there's a time period where it's a good time to buy cars. So I don't know if you guys remember, but 2 years ago, or a year ago, car prices went up. And the reason being was, and I think it was still because of the virus, right? Because the people weren't producing as much during the pandemic and years after. So there was a shortage of chips and things that go into cars. So they weren't producing as many cars. So again, simple supply and demand. If there's less supply and more demand, price goes up, right? So that was the thing with that. So, but, and I'm trying to think. So yeah, so my lease that I had with the IS 300 that I put $3,000 down and 4,000 had $10,000 in equity when I gave it back. Because remember, I only put 3 years on it. It was brand new. I think when I turned it in, it only had 20,000 miles, or maybe a little bit lower. I think it might have had like 18 to 20,000 miles. So at that time, 18 to 20,000 mile car that was basically brand new, they were able to get $10,000 more of it. They were like begging me to trade it in and get a new car. But when I did that, I had $10,000 worth of equity. So they gave me that equity to put down on the new Lexus, right? Now, I think all I had to put down was like 500 to $1,000 out of my pocket, and trade my old Lexus in and get into a new lease, right? Now, it was lucky for me that I had that happen, because if I didn't have that equity, my car payment now for the new Lexus is $463, and I already had it for 2 years, going half a year more, so it's like 2.5 years I had it. So yeah, if I didn't have that down payment money, that equity in my old Lexus, I would have had like a $700-800 payment, which I definitely was not going to do. But since I had that equity, the payment, my car payment was $463. Now it's $463, and I only had to put $1,000 out of my pocket. So 5.5 years, I spent. It was $17,000 for the first Lexus, and probably another 12 to 13,000 for this one. So around 29,000 in 5 years worth of it, right? But no maintenance costs at all for those 5 years, right? So yeah, so now what I'm thinking now, I'm coming at the end of my lease in October, and I want to get electric. And the reason why, and this is, for me, it's a financial decision. One, because where I live, they let you charge for free, so it just makes sense to get an electric vehicle. I should be taking advantage of this. I've been living in apartments that offer free charge, so I've been missing out. So I think that's gonna save me $200 a month. So I told the person that's trying to work the deal out for me, I said, hey, my current car payment is $463. If we can get it to $500, I'll do it, but I don't want to put anything down. The most you say that at first, but I would put like $1,000 to $2,000 down. But I always say I don't want to put anything down, and then we kind of work our way up from here. But here's the thing. For Lexus right now, he was telling me that there's a potential rebate of $15,000. Now, I don't know what that means, but he said it was for leases. So I'm thinking that will go to the equity into the car, because I really don't want the rebate, right? They could keep the rebate as long as I don't have to put any money down, and I could get into an electric vehicle and my payment goes from $463 to $500. That's only a $37 increase each month. But now I got rid of my $200 to $250 to $100 gas payment that I pay each month, because I pay like $40 to $50 every time I fill up. I probably fill up 4 to 5 times a month. So now I'm saving $200 to $250 on my gas, and I got a $50 increase in my car payment, which obviously it makes sense to do. So the question is, should you transition to electric vehicle? My thing is, if you already have a car paid off, probably not. It's probably not the smartest thing to do. But since I lease my cars, it just makes sense for me to get into an electric vehicle. And especially if I could get something with this rebate. The guy didn't hit me back up. It was funny because like they were hitting me up. And then when I said, hey, because I said I wasn't really not sure, But then I said, hey, I'll do it for 500, and then I don't want to put anything down. They still haven't reached back out to me. Probably reach back out to me tomorrow because the dealership is busy. But I just think it's funny too when you try to negotiate with them. The response time gets a little bit slower. But yeah, I think if you have a car paid off already, I think you should just stay with your car, pay the gas. But I think, and when you do consider a new vehicle or your car needs to be repaired or you need serious maintenance, and you said, you know what, I'm just gonna get a new car. I do think an electric vehicle is something to consider because, again, you get rid of that gas payment. So let's say a typical car payment is 350, 450, but you could get an electric car. Remember, there's electric cars for all brands out there. Honda, Toyota, they all have electric vehicles, so you don't have to get the most expensive vehicle. The reason why I'm staying with Lexus is because I already have equity with them. I already have a car, so they'll take this one and sell it out and say, okay, you don't have to put much money down, or you don't have to pay for the miles that you went over. So it's beneficial for me to stay with the same company. I did want to try out Tesla and things like that, but then I would have to come up with a fresh down payment, have no leverage, have no relationship there. So, and right now I really don't care. I just want to I need a car. So I'm just trying to get the best deal possible. I really don't care about the brand at this point. So yeah. But yeah, if you have a car already, stick it out a little bit. I think would be the best choice. But if you are going to get a new car, I think considering an electric vehicle may be the way to go. And check out some of the lease options. A lot of these electric cars have rebates, $10,000 to $15,000 rebates. Again, I don't know what that means specifically. Obviously, that would probably mean a lower down payment, less you have to put down. But you have to speak with that with the person selling you the vehicle. But yeah, that is my rant about the electric car. Most likely I will get one depending on the deal they get back to me. If it's good, if I don't have to come much out of pocket, that's most likely what I'm going to do because October is around the corner and I'm going to need a vehicle. But yeah, Nvidia, I think AI, GPU, semiconductors, they're all going to do good, but I just think maybe they're a little overextended, but who knows? Maybe we're just in a super bull market. And I'm bullish on the next year to two on AI and semiconductors, crypto, all that for the next year or two. It's to be very bullish. But yeah, make sure you guys, okay, that's the end of the video. Make sure you guys go follow me on Instagram, Mr. Financial Nutrition, TikTok, Financial Nutrition. I post Monday, Wednesday, Friday, Sunday. During the week, I post at 6 p.m. On Sunday, I post at 11 to 12. But yeah, follow me on those platforms. I would appreciate it. Thank you guys for tuning in, and I'll see you guys in the next one. Take care.